A little RSI analysis. So back in October of 23, Q4, a good old Q4 pump. RSI stayed overbought for about 24 days and it went to about the 88 value. The ETF hype pump at the beginning of this year, 24, around February. That's when the RSI crossed through to overbought and it went again, topped out at about the 88 value. So I'll be scared to short this type of price action when the RSI is approaching, not even turned down yet. It is approaching and crossing through the overbought area. And you can see price action. Once that happens, that's when you get your super trending upwards price action. The longer this flows, because as I discussed in my second to last video, I gave a RSI tutorial in depth, an RSI tutorial that most people don't give, that show that this is a trending indicator, not a momentum indicator. So the more it chopped up and down and overbought, that's when price just goes crazy. So just compare 24 days and 35 days. That's a long pump. And also we can see that the pumps were about almost the same as far as how high it went. Now right here, Tuesday, October 24th, it's just peaking above the overbought, which it did last time a week ago. So I don't see, at this point in time, I don't see any type of negative divergence because price already made a higher high already on the daily time frame, and this RSI is making a higher high. So if you're not in any type of trades, or you missed out, or you're trying to catch a pump, you should try to look, I don't want to say you should, you would want to look for a pullback on the smaller time frames, 15 minutes to 4-hour time frame, to try to get in if this is going to be the start of the Q4 blowout. In my opinion, it's just my opinion that this bull run will be over by the end of Q1. I'm not saying Bitcoin is going down forever, but with the way volume is and nobody else entered the market except the ETF buyers, I don't see a bull run going much longer. So let's look for this trend on the RSI. If we get pullbacks, we could see, let me use an arrow right here, to the 88 value. You just don't know how hard the price could pump if it does continue to pump. But so about that point on the RSI, that's the value of how high the RSI pumped last time. So this is what I'm keeping an eye on, this trend. This is why the RSI is important to me, because it's a trend indicator. I want to see price and the RSI stay in this uptrend. Now that we broke above the overbought value, I want to see the RSI stay there and see explosive price action. I don't want to see it. I don't want to see Bitcoin just fizzle out from here. I can't say I don't like saying I told you so, but this weekly order block, this big purple box that I've drawn over and over, this was the target that we've been looking for months. When I started shorting altcoins and also Bitcoin back in March, people thought I was crazy. I drew an order block on those videos that I talked about, that the price targets at the weekly fair value gap that went all the way down to the 40K area. I gave a DCA roadmap that showed key areas where everybody was scared to start buying at. I gave that roadmap. I don't tell people what to buy, but I showed what I buy. And I also showed my entries at those areas where I took major trades. After we came out of that area, once again, I started saying this area right here between 67 and 72K, this weekly order block. This weekly order block was my price target. Now this is going to be another short video. It's a short video because if you were scared to make entries down in this area, 50K area, this wick down here at 48, the consolidation we had multiple times between 60K and 56K, there's nothing I can tell you right now except if price keeps pumping, you missed out. And if you want to risk some money, you would have to go down to the smaller time frames right now. Let's drop down to the smaller time frames. Let's see. You can see we have this 4-hour chart, the 5 EMA, very strong. This is one of my favorite pump trend EMAs, this red 5. So we came off of it, came back and tested it. This could be an area where we could bounce from right now if we keep this uptrend. If we don't, here goes the middle of the Bollinger Band, the 20 period moving average, this yellow moving average right here. Right now, it's about 69K. So this could keep moving up or it could kind of go down. This could be an area right there, right here at 71.9 where we're at right now. That could be an area where you could put a little money at. So right now, if I didn't have skin in the game, no spot bags, no leverage positions, this 5 EMA, I wouldn't want to see a close below this, a 4-hour close. I wouldn't want to see a close below that. I would like to see it bounce off of here and keep going. Or if you just want to try to play safe, you could try to wait for a pullback and bounce off of this breakout area. I mean, this was a breakout, all this consolidation we had right here, where I'm circling with my cursor. This is like at the 69K area, and that's where the middle of the Bollinger Band is. Now these EMAs could keep pushing up as well as the bottom of this Bollinger Band. And if you were just gonna be a sideline participant and you wanted to play extra safe, you could wait to see, I don't know how long that would take to see if price is gonna come down to the bottom of this daily time frame Bollinger Band. I'm sorry, 4-hour Bollinger Bands, which will probably bounce off the bias, go back up. That's how price action usually does. Bounce off the bottom. Let's drop down to the hourly. Here's the EMAs once again on the hourly time frame. You just want to keep seeing higher lows and higher highs. Now we're getting some red candles. The 1 hour time frame RSI is in overbought. The stochastic has already went to the oversold value. It's already resetting on the hourly time frame. So you could play into these EMAs, which again, you have the 50 EMA, this dark blue EMA right here. That's at about 69.9. And then we have the 200 at 67. So if you just feel like this is going to be some ultimate pump, you could take 10 to 20% of your bag, drop it right here, take another 10 to 20%, have it ready at the 69K between the 50 and the 200. This is my pullback area that I use when I'm looking for pullbacks on any time frame that I'm trading on. Between the 50 and the 200 is what I'm always looking for. So you could wait for here, or you can wait to look. Here's the Bollinger Band, this little gray line right here. You can wait to see if price comes down, makes a higher low, shows rejection wicks, and goes back up. That's a good way to make money. Or you can just sit on your hands and not drop any money right here and just patiently wait to see if we keep this 1 hourly uptrend and see how price reacts on the Bollinger Band, rejection wicks, and if we can come to the 50 and 200 EMA between here, wicks down here, see bullish divergences on price action with the oscillators, volume, all those things that I show. That's what I use for day trading and swing trading. You know, you can wait for that. I personally don't like FOMO went in, so I wouldn't recommend that unless you're going to go with a DCA approach, because if you go with a DCA approach, you can get more money into the market safely without just taking a big hit and getting stopped out, or just getting liquidated if you're using leverage. Let's see. So yeah, let's see here. So this is the hourly chart. These are some huge wicks right here. This is the type of trajectory you want to see. As you all know, I do not use trend lines to trade. I use trend lines for direction. So this trend line right here, you can see how it goes up through these EMAs, the 20 and the 50. The EMAs are perfectly fanned out. You want to try the pullback method, you could try to play this uptrend right here. So many guys, I've watched them for so many years, and I'll repeat this again. You can probably see me say this and do the same example many times. Guys drawing the trends off their little points of contact, 2 or 3 points of contact, which you're supposed to have 3 if you're really obeying the rules. But guys just start drawing them, then price goes through. Oh, let's redraw it again. Oh, let's redraw it again. Looking like buffoons out here. They know they're getting their asses handed to them, but they won't admit it. But I know they are, and that's why they never post their live trades. So that trend is what you want to see keeping the hourly chart. I feel like that's a safe chart to do that. If you can't keep a trend on the hourly time frame, then that means things are not looking good. And let's go to the 4 hour time frame. This is so strong with the 5 EMA. I mean, this is what I always like to see. Price staying above the 5 on any time frame. This uptrend, you would just, if you're on the 4 hour time frame, we would just be looking for a correction and basically making a higher low. That's what we're looking for. Remember back on the video when we had that huge wick down to 48K, and I told everybody that order block at 50, that's where the candle closed at. 50K was a major order block on the weekly time frame, and that's where I entered a trade. And then I entered another trade around 55K, and I showed it on the video, because at that point in time, it was just like this. Nobody knew where the higher low was going to be formed. So I looked for confluences with volume and order blocks on a small time frame to see where we could make a higher low and price move up. So any higher lows, which here's the middle of the Bollinger Band right here. Here's that 69K area where the consolidation was, where price broke out, all in this area right here, 68, 69. And here's the EMAs in the middle of the Bollinger Band. I wouldn't want to see price lose 65K area, like 65, 66 from right here where my line is drawn, 66, 8ish down to 65K. I mean, things will really not look good if it went there. But then one could argue that would still be an uptrend in the overall grand scheme of things, because you could draw this trend line right here. It's that 48K. You could basically use this trend line right here for the trend line people. Currently, a dump from this area could take you back down to 62K, 62.5. If it would just be some type of crash from this point on, like literally from this daily candle or tomorrow daily candle crash. I don't see that happening right now because of where the RSI is sitting, and we did have some volume. In the overall volume, the volume is still trash. I'll go over that in a second. But as far as our daily candle volume candles, they were getting larger one after the other. The 4 hour was getting larger one after the other. The RSI is going into overbought, which can be a signal of a explosive uptrend. So I don't see us crashing down to 62K right now, but I always give the other side of the analysis, because price could get rejected right here and start a series of lower highs and lower lows on the smaller time frames, come down to where there was an order block on the daily time frame right here. I drew this. This was the pullback area that I called like 2 weeks ago. Price almost got to it. I was just a few $100s away from it hitting my, daily time frame and 4-hour time frame order blocks and fair value gaps. Came close, but this could be the overall uptrend. If we get rejected, that's the negative side of this. So is this the beginning of the explosive end of the year Q4, beginning of Q1 bull run blast that everybody's looking for? We have to see. But if you didn't have skin in the game, this is where things can get complicated. But I want to give this video because I want to give an outlook on, I need this trend line because that is not what I fuck with. But daily time frame, bottom of the Bollinger Band right here, 61K. The middle of the Bollinger Band on the daily time frame, 66.5 area. And then we have the EMAs, the 50 EMA, 63,006. And that 50 EMA has just crossed through the 200 EMA. And that is a bullish sign as well. The crossing up the 50 through the 200. So let's look for the trend to keep going. I'll probably drop another video next week just to see how things go. I'll probably take me some scalps up and down, just depending on what price action and volume is doing. But for right now, I wouldn't recommend fighting this trend. You see we're in the uptrend, higher highs, higher lows. I just drew the trend line. And even on the smaller time frame, we're just on an uptrend. We just made a higher high. Let's go to the hourly. I'm getting a little bit of red right now. The hourly stochastic reset. Let's see what we're looking like on the 15-minute. Okay, the 15-minute time frame has not even showed a bearish divergence on the RSI. It showed one on the stochastic right here. Price made a higher high on the 15-minute time frame. Price made a higher high. And then you can see the stochastic made a lower high, but not on the RSI though. RSI did not show that. So I can see this little pullback. I'm gonna be looking to see if this area right here, 71.9, where we had a rejection off the Bollinger Band, the price could possibly double bottom right here. And also you can see the top of this candle where my cursor's at. We had 2 candles right here where my cursor's at 71.9 as well. So this could be a support. This is only the 15-minute time frame, but this could be a support and resistance area right here. And I think I drew this line earlier on the hourly time frame for a pullback. So 71.9 could be a good attempt to try to see if we get a bounce to come back up and create a higher high and keep this trend going with these EMAs too. This is the 50 EMA. So let's go have some fun. I just wanted to get this update because the RSI was the scariest thing for anybody that wants to do something stupid. RSI going into overbought on the daily time frame, posturing up like that, it could be explosive, and people trying to short, getting wrecked, then they don't know what direction goes. They're all discombobulated. Lost a lot of money now. They're mad at Bitcoin, and whoever's chat group they're in, they're blaming it on them. So peace out. Get that money. Right before I was ready to upload the video, but there is bearish divergence. Because the 1 hour time frame is also overbought. So you have price made a higher high right here, made a lower high. So that is a negative divergence. As we come up to that 74K, high 73K area, which is the weekly top from our previous order. That explains the little red we've seen. But in a strong bullish uptrend, you would want to focus on the bullish divergences. So bearish divergences can definitely signal reversals, but on uptrends and strong uptrends, it can basically just mean a pullback, and that could be a very small pullback. So look at volume right here. We had the green candles, the green where my cursor is, the green volume candles. They were going up, they were not shrinking, and boom, we hit that resistance, that purple line at about 73.7, and then price pulled back down, almost made it to the middle of the Bollinger Band, the bias, the 20 PMA, the yellow one. So look at the red sell volume candles. People took profits right there. Price went down, and the red volume candles are larger than these green candles right here. So there was large green candles. Look at these large volume candles, these large green ones right here at the 69K area. So that's where a lot of buying pressure is. And I'm not saying price has to go down there, but I'm just saying this is the explanation why we have these red candles at resistance, and it's showing the volume came in that supports that. At the beginning of the video, I gave my opinion on why I think Q1 will be the end of the bull run, like the end of Q1, because of the overall volume. We have the ETF, but that's it. People buy the ETF. Retail has not entered the space, and that's why it's my opinion. If anything changes, I'll be happy to change, but here we go right here. I've showed this chart many times. This is trash, 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 trash. No matter how much you want to say it ain't, it is. That volume was already trash, and it got trashier. Can't you see that? The strongest volume we had was the sell volume, which I understand, that's just how things go. We had that, and we had this, and it just keep getting worse. But things could change. I'm not saying they're not going to change. I'm saying if they don't change, end of Q1 is the end of the bull run for me, is what I think is going to happen. Where are the lies? And then we'll have another bear market and then another bull market. That's just how it goes. So it could take a while for Bitcoin to reach these phenomenal levels that everyone's calling for. I hate to be the bearer of bad news, but the volume is the one giving this bad news right now. Let's go to the monthly time frame. ETF hype, March 24, peak volume. And you can see that the bull run started last year. ETF hype went hard in January. Then after that, sold off. So we see volume. This is the monthly time frame. We see volume start going back up. I'll change my analysis. But for right now, I just don't see it.